I think this is one of the huge reasons that people generally, especially over the last 50 years, since the silver is taken out of our coins in 64, and then 71, the gold coming out of the dollar, from Nixon and Lyndon Johnson doing those two things, which, again, they kind of had to do because that's the point we were in history, the Federal Reserve coming 50 years before that. This is the sneaky thing that, well, number one, the poor and middle class really don't even have financial statements. You know, the poor don't have anything, unfortunately. They're not taught that. We're not taught financial literacy in school. Weird, figure that one out. And then the middle class, they might have a budget. You know, they might have their income expense or their P&L, a budget, something to that effect, right? Their income statement. That's something that you're going to see, you know, generally, and this is where your cash flow comes from. Your income minus your expenses equals your cash flow. So if you have income minus expense equals cash flow. So we kind of understand that. We get that. A lot of people have kind of been taught that. It's kind of Dave Ramsey school of thought and things of that nature. And so it's easy. It's somewhat easy. You know, your job, you know, right here, you have your job, obviously, you know, income comes in, and for poor people, it comes out and goes out, their expenses, and they're paying things, you know, one off. And this is the stuff adapted from Robert Kiyosaki, obviously. This is the person that really helped, you know, start orange pilling me and red pilling me, you know, almost 15 years ago in the 08, 09 crash as a senior at Michigan State. So, you know, you see this and you have someone with a job, the middle class is generally taking it and they are going out and paying their liabilities. A doodad, or maybe someone that is the lower rung, they have things they're paying one-off for. Liabilities are things you're paying a monthly payment for, right? Debt, you know, some type of debt that you have, mortgage, car, student loans, boat, whatever it might be. So that's the poor, the middle class, and then the wealthy are the people that have assets. And like we said in other videos, these are people that they don't believe in the dollar. If the dollar was actually worth something, you would want to hold the dollar. It wouldn't make sense to hold any of these other assets necessarily. And you could, because you want to bolster your economy, you want to build an economy. So it's not that you wouldn't, but you're going to hold maybe a bigger share of the dollars until you get to a certain point. You're like, hey, I got a lot of dollars. I want to go invest. I want to get a return somewhere else and diversify. I want to build the economy. So this is where you have the wealthy. They have assets that they buy with their dollars, and then their assets provide income. That's the difference. So their assets are the ones paying instead of someone working for their job, someone trading their time for cash. You have your assets working for cash. Then you can pay things off. So your assets are huge. But this is the big thing. This is the big difference, though, with why I believe that people, and again, you can disagree with me, you can let me know your thoughts on this, but why I think that people really get pushed into the lower rung, especially now with a currency, and we don't have money. Money is a store of value. We ceased having money in 1971. So people believe that their fiat dollars are an asset, but they're really liability. And this right here, the wealthy have a balance sheet, your assets and liabilities. So your income statement, you have your balance sheet, and then you actually have a third one, right? Your cash flow statement. But this right here is really one of the secrets of the wealthy. It's having a balance sheet. And this is, again, something not taught in school and in any personal financial literacy, anything like that. But this is the big one, truly, I believe. It's understanding that your assets put money in your pocket. Your assets are going to go up in value over time. Your liabilities over here, the things that go down in value over time, are to take cash out of your pocket. This is where fiat dollars exist. And this is why the average person gets absolutely clobbered day in and day out. They have too much month at the end of their money. Bitcoin is the asset. You have real estate, paper, commodities, business, really the big four asset classes, and then Bitcoin. Bitcoin is the new one. It's savings. People traditionally thought fiat dollars went into savings. It was an asset. An asset, again, is not something that's losing value. Bitcoin is Bitcoin. One Bitcoin is one Bitcoin. The fiat currencies are things that keep going up and down in value. Is it $20,000 per Bitcoin today? Is it $40,000? That's the thing that keeps changing. Bitcoin is energy, and energy doesn't disappear. It only transfers states. So Bitcoin is energy. Energy is Bitcoin. Time is Bitcoin. Bitcoin is time. Bitcoin is finite. It's the only thing I know equal to my finite time. The only thing. If you know something else, please let me know. I mean truly finite, truly inelastic, not, oh, it's got a small inflation rate, etc. gold and silver have a small inflation rate. I used to be a gold and silver bug 10 years ago, but Bitcoin is the only thing I found that's perfectly finite like my time. So why would I trade anything else for my time? Bitcoin is the only thing I will trade for my time. Bitcoin is the asset. That lies on your asset side, your asset column in your balance sheet. Fiat dollars are the liability that lie in the liability column of your balance sheet. This is the difference. So the big secret is that most people that don't get ahead, the average person, this is why the average person from 35 years old, just looked this up this week, 35 years old up to 75 years old and beyond, the median per age group, basically the average of all of that, is about $300,000 to $350,000. For 35 years old all the way up until 75 and beyond, the average of those groups, the median is like 200, 250, 300, 350, 400. That's like the median all the way up. So you average those out, it's about 300,000, 350 or something like that. But it's because most people, and you think most of those people have houses, things of that nature, and it still doesn't buoy them enough. It still doesn't. Their 401ks, garbage. 50 years that we've had the 401k, and the median of the 401k is anywhere from $30,000 to $130,000. The median, I believe the average, it might be 130, and the median is 30. 50 years. Do you think something might be broken? Maybe we should try something different, because that seemingly doesn't work anymore. But it's because things are priced in dollars. Whether it's your insurance policies, whether it's your stock portfolio, it doesn't matter. They're priced in dollars. And fiat dollars are going down in value over time. Bitcoin is the finite thing equal to your finite time. This is the asset. This is the liability. This is why people get poor, because they can't retire, and they're having so many problems in society. Again, in my opinion, if you think I'm wrong, please let me know. Please let me know what I'm missing. But from my study over the last 15 years, it's because people continue to save in dollars, and they think it's an asset when it's really a liability. That's the insidious trick of fractional reserve lending, of central banks printing currency and creating inflation, which is the evil. Not money. Money is not evil. Money is just a tool. The evil is the printing of the currency and taking the time, stealing time and energy away from human beings. That is the evil. Let me know what your thoughts are. I think this is really, over the last 15 years, has really helped revolutionize the way I think. So that way, I made sure to save in these things over the last 15 years. And it's been blessed because I found that early on. Didn't learn it in school. Didn't learn it at a public university, that's for sure. Or public school, government-run schools. So I appreciate you. Please share this out. Let me know if you got something from it. And let me know your thoughts on it. I'd love to know your thoughts on what you think and how you kind of see this. And you think I'm way off base, from crazy, or from maybe you think I got it spot on. Let me know. Trust, but verify. Question everything in the boldness, even the existence of God himself. And this is not financial advice. It is freedom advice. And we look forward to seeing you on the next one.